Hello, Master Your Money listeners. Welcome to today's episode. I am so thrilled because the month of September is Life Insurance Awareness Month. This is a month dedicated to educating individuals about the importance of life insurance as part of their overall financial plan. Life Insurance Awareness Month happens every year for as long as I can remember, and it is really an important month for everybody, but especially for us in financial services and especially for us who are so dedicated to life insurance and making sure that everybody is properly covered for the unexpected. So to support Life Insurance Awareness Month, I have my very good friend and my dear colleague and one of our life insurance experts here at Barnum Financial Group, Brian Parmalee. Welcome to the show, Brian.
Thanks for having me.
It's my pleasure. I'm so thrilled to have you here. So Brian Parmalee is the Vice President of Risk Management here at the firm. He has been here for over 11 years. Brian's role at the firm is very unique. Brian works with both clients and our financial advisors. So Brian is one of the specialists we have here at the firm who wake up and go to sleep thinking about life insurance. As Brian and I were just sitting preparing for the show, Brian made a joke that every month is Life Insurance Awareness Month for Brian and his colleagues. But Brian eats, sleeps, and dreams life insurance. Is his job to know this product inside and out. Brian is one of the professionals you'll see campaigning for life insurance, for the betterment of life insurance. And we are so grateful for all of your efforts and all the educating and campaigning that you do.
Yes, I'm a certified life insurance nerd.
Well, we love it. And we all get the benefit of that nerdiness, of said nerdiness. Mm-hmm. We talk about life insurance often on the show, and certainly we talk about life insurance a lot at Barnum. And we all know the topic, although wonderful and although important, could be long and could be a little bit heavy. So what Brian and I are going to do today is we are going to do a life insurance speed round where we are going to talk for 15 minutes and try to answer the most common questions regarding life insurance. So Brian, are you ready?
I'm ready.
All right. We have 15 minutes on the clock starting now. Here we go. Brian, very simply, what is life insurance and why do people need it?
Okay. Yeah. So that's an easy one. Life insurance is it's a liquidity event. When someone passes away, their beneficiaries receive tax-free money that they can use to pay off debt. They can use it as a form of income replacement to replace future expenses. But at the end of the day, it's just a tax-free lump sum of money that goes out, skips probate and goes to your beneficiaries.
And acts as a safeguard. So you can safeguard the income that you'll be leaving behind and that people are dependent on in case of worst case scenario.
Yeah, absolutely. And some people choose to replace all of their income until they would have retired. Some people would choose to replace none of it. It's a comprehensive approach where advisors and myself are talking to clients about what's important to them, because you do have the ability to right size the amount of coverage that you want to get out in the open market to cover what you want to cover.
Great. And that explains why people need it, because you are losing a portion of your income due to an unexpected event.
Correct.
Yeah. Those expenses keep coming.
On the individual side of things, yes, it's very commonly used in business planning as well for liquidity events. There might be two partners that need insurance on each other, but on the individual side of the story, it's really just how do we maintain lifestyle? If something happened to me, I would want my wife to not have to worry about the finances. I'm already not there. It's already an emotional time in life. So not having to worry about keeping the house, not having to worry about keeping the kids in school. It's an emotional sale. And I find that most people purchase insurance on the open market emotionally, and then ultimately on the back end will justify it analytically based off of product and price and how long they want the coverage.
You got it. Beautiful. Next question. Next most common question. What is the difference between term life insurance and permanent life insurance?
Great. Well, I think permanent insurance really kind of speaks towards itself, right? It's permanent. It never expires. There can be a cash value component to it where clients can access that cash value where they're still alive. It kind of gives them a bailout provision too. So if they don't want the coverage anymore, they can take a lot of their premiums back. But it can be kind of expensive to own permanent life insurance because it's permanent. The death benefit gets paid out no matter what, so long as you make those premium payments. Whereas term insurance is, it's temporary. You got to think about it like renting your coverage. The rental agreements are typically a little longer than your rental agreement might be through like an apartment or something like that. But typically 10, 20, 30 years, you agree with the insurance company to have coverage. And after that duration, that coverage expires. This tends to be quite a bit cheaper than permanent insurance because 99% of people outlive the coverage. So it's a great way to pass the risk of something happening to you onto an insurance company because it tends to be pretty cheap.
Because the risk is expiring.
Yeah.
At some point.
Exactly. And people are living longer and longer.
Yes.
And people are outliving these policies more and more.
So it's attractive because it's cheaper, but so it's a good way to dip your toe in the life insurance waters, but may not always be the best solution.
Right.
For your life.
Yeah. And it's very common for people to not do one or the other and to do both.
Great. How does somebody figure out, no matter which one you choose, term or perm, how does somebody figure out how much they need?
Yeah, another great question. I think there's really a few different schools of thought here. Personally, when I'm talking to clients, I think that there's kind of a minimum and a maximum approach. I think that at a bare bones minimum, we can all agree that your debt should die with you. You don't want anyone to be on the hook for your debt that you took out while you were alive. So at a minimum, we should have enough to pay off the mortgage, credit cards, student loans. And then I think we already talked about it a little bit. There's also income replacement.
Yeah.
So I commonly ask, it's funny, I'll ask clients, hey, what do you think your biggest asset is? And 90% of them say their 401k or their house. And realistically, it's your ability to, like, how much income are you going to make between now and when you would have retired?
Yeah.
It could be a big number.
So as soon as you start acquiring debt and earning a living.
Yeah. And there's approaches to getting it even before that too.
Sure.
I think we'll talk about that a little bit later, but
sure.
It's really an individual approach. How much of this is important to you?
And that answers the question that came in next, which is at what stage of life insurance should people start? At what stage of their life should people start buying life insurance?
Yeah,
which
fair.
goes back to said one.
In my defense, I did not know the questions ahead of time.
That's okay.
Yeah, I mean, there are definitely different stages of life, and when you're talking about buying insurance, I think, yeah, once you start having a mortgage and kids, it becomes a lot more mandatory to own something.
Yes.
But it's very common for clients to even sometime before that just get something in place just to lock in pricing. Because think about how many people, we talked about outliving your coverage. If you're a 35-year-old buying 30-year term, most people are still going to outlive that coverage, but there's going to be more benefit paid than a 25-year-old getting a 10-year policy.
Sure. And you're locking in your health.
Exactly.
Yeah.
You're locking in your health as well.
Yeah. Beautiful. Okay. Next question. Speaking of health, what factors impact the cost of life insurance premiums the most?
Yeah. So that's kind of a loaded question because it can be a lot of different things. Obviously, they're going to look at health.
Okay.
They're going to look at, if you take care of yourself pretty well, you're going to the doctor, you're making sure you're in good shape, you're going to pay not that much for your coverage, but other things can come into it too. Could be a condition that you might have picked up as a kid. You know, we see juvenile diabetes sometimes. That something like that could factor in. But what a lot of people don't anticipate being brought up in terms of how much they look into things is they actually even look into driving records. So if you have a few bad speeding tickets, you might have to pay 2 or 3 times more for your life insurance than if you did not have those speeding tickets. So just another reason for that 25-year-old to pick up the coverage today.
But health and age, right?
Health, age, gender is the short answer there.
Okay. Beautiful. Can life insurance be used for more than just covering final expenses? So for example, wealth planning, financial planning, or business planning? Yeah,
I think we talked about income replacement, which is already quite a bit more than something like a funeral might cost.
Yep.
But yeah, to talk about business planning, I mean, it's very common for people to, like I mentioned earlier, if I own a business with you, we're 50-50 partners, the business is worth $2 million. If something happens to me, you need $1 million to buy out my family.
Yeah.
Or you have to own it with my wife, who you might not want to own the business with, or she might not want to own either. So you get to buy her out with that $1 million. There is, people use this for estate planning. People use this for cash value, as a retirement type of planning.
Yep. So it's another strategic tool to have in your financial planning tool belt. And the uses are endless, but everything's going to depend on your goals.
Yeah, exactly.
And what you're looking to accomplish.
Exactly. Final expense policies. You see the commercials for them all the time.
Yes. I think that's why that question came in.
Yeah. It's just one of those. Yeah. Because you see, especially if you're watching daytime TV, you'll see the Colonial Penn guy up there talking about the $9.99 plan. And, that's not the right amount of coverage for, I would say, 99% of Americans.
Okay. I think this is an easy one that you touched on it, but what happens if somebody outlives their term policy? So they bought it for 10 years and they're still doing well.
Yeah. So think about it like a rental agreement. We can go right back to apartments. Mm-hmm. What happens when your lease runs up on your apartment? You either leave and you no longer have that, or you renegotiate. Mm-hmm. And when you renegotiate, that's the exact same thing that happens in the life insurance world. You have to go and get a new policy if insurance is still important, and you have to qualify again. So your health might have changed during those 20 years that you earned the policy. You're also 20 years older. It could be quite a bit more expensive to renegotiate those terms with the insurance company.
So it's better to kind of every few years do an insurance audit. And as your life needs increase, as your income increases, as hopefully your health is doing really well, to, slightly increase the term or maybe switch to permanent.
Life events.
In the best case scenario.
Life events. You have a kid, another kid, buy a house. Like these are things where you should be thinking about how much insurance you're carrying.
All right, great. How should someone go about choosing between policies or providers, whether you need term or perm?
So I think my personal opinion, and there will be varying opinions, but my personal opinion is we need to get to the death benefit amount before we get anywhere else. We can talk all sorts of benefits about whole life and variable universal life and accessing cash value and all that fun stuff. But if you're only getting $100,000 of whole life because that's all your budget can afford, what are we really doing here? Mm-hmm. We need to get to a death benefit amount first. And if you need $1.5 million of coverage, because we walked through why you might carry insurance, then we should get to that $1.5 million of benefit before we talk about incorporating other products.
Mm-hmm. And when I looked at this answer in my head, I said, you should work with a financial professional.
Yes, 100%. Because without working with a financial professional, and if you're just doing this yourself online, like you're not going to have that comprehensive conversation with how much is important. And then to bring back your other question on carrier, when you're looking at the quotes online, they're basically, depending on the company you go with, there's an ability to switch your coverage to permanent insurance for a guaranteed point, a guaranteed duration. So if you go with a Prudential or a Mass Mutual or a Nationwide or a Securian, you're going to have that ability for a good amount of years to switch your term coverage into permanent product. Mm-hmm. And the technical term for that is term conversion. Yep. But you have the guaranteed ability to switch your coverage to permanent with some of those more reputable carriers that aren't going to show up at the top of a spreadsheet on price.
You got it. And we wish everybody was healthy, but we're all human and just things happen.
Yeah.
And I think your underwriting professionals, your financial professionals, especially the ones here at Barnum, we know which providers are more advantageous based on what's going on with you.
Yeah.
Based on, what's going on in your health, where you may, where you may need some extra attention.
Right. And you might just look at the quotes and say, why would I go with the expensive one if I could go with the cheaper one? And you got to kind of relate it back to, I don't know, like buying a car is a good example. You can get the most basic bare bones car that's going to get you from point A to point B. And yes, that's a car. Mm-hmm. But if you want to pay up a little bit more, you might have a better experience.
Yes. So work with a financial professional. Okay. 2 more, the most important ones. What is the one most common myth people have about life insurance?
Yeah, this one was easy for me. The most common myth is that I've got it through work, so I'm good.
So you're good.
Most times when you're going through your benefits at work, you're getting 1 or 2 times salary. You might be capped at a certain amount anyways. So it might be 1 or 2 times salary capped at 200,000 or something like that. So even if you're making $1 million, you're only getting 200.
Yep.
Not that that's everybody, but it's not enough coverage through work. You're not going to have the ability to switch it to anything competitive on the permanent side. So what I have through work is what I definitely hear the most from clients.
Got it.
But it's almost never enough.
Never enough. Okay. Fair. All right. Last one, in 1 or 2 words. If you could give one piece of advice to someone buying life insurance for the first time, what would it be?
I think you already hit the nail on the head earlier. It's talk with somebody that knows what they're doing. Talk with a financial professional. Don't go it alone. Talk to friends that might have gone through the process. Make sure you're talking to a licensed insurance professional, and make sure you're having the conversation about how much insurance is appropriate to carry and what type.
Boom. Done. Ringing the bell. That was life insurance speed round. Hopefully we were around 15 minutes. But Brian, that was really great. We rushed this episode just to give people the basics in a short amount of time, because that's how we all like to consume content. But please know there is so much to life insurance. It is a very complex product, which is why we are so grateful for the fellow Brians of the world and all the associates at Barnum that focus on this product. If you would like to learn more about life insurance, if you'd like us to help you conduct a life insurance audit, all of our contact information is in the show notes. Please feel free to reach out. We'll be happy to do that for you for free. Everybody, thank you so much for being here, and happy Life Insurance Awareness Month. Brian, thank you as well.
Thanks for having me.
Thank you for listening to Master Your Money and Mindset. You can find these episodes on YouTube or wherever you listen to your podcasts. Don't forget to like and subscribe if you enjoyed what you heard. You can follow Barnum Financial Group on LinkedIn and Instagram. Thanks so much.
All opinions expressed by the program participants are solely their current opinions and do not reflect the opinions their respective parent companies or affiliates or the companies with which the program participants are affiliated. Investments or strategies mentioned in this program may not be suitable for you, and you should make your own independent decision regarding them. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You should strongly consider seeking advice from your own investment advisor. Securities and investment advisory services offered through qualified registered representatives of MML Investor Services, LLC. Member SIPC, 6 Corporate Drive, Shelton, Connecticut, 06484, telephone number 203-513-6000.